Okay, February 27, 3:09 p.m. Looking at Target TGT. Target will be reporting earnings tomorrow morning, so this is the last hour to trade earnings. It's currently at the IV of 66%. And the unusual options that I saw today, that's very unusual, is this 12:57 p.m. There's actually three of them together. Let's say at 499 contracts together. So this was placed, and for on the March 3, the one that is going to expire the closest, you'll see here. This is the strike prices, the 150 puts and the 165 puts, and then the 182 calls. So what does this mean? Let's analyze this together. On the options tab, here it is. So I think what's happening here is that the 165 puts are being bought, and then the 150 puts are being sold. So this is a bear put spread. And then the 182 calls are being sold right here. And so this is the trade here. These are the three trades. And if we analyze that together, you'll see here, this is the trade. We are currently at 166 right here. And so it will, if it goes down, it will be profitable. And if it goes up, there's a max loss if it goes up right here. It has to kind of break 180, it's around 182. Otherwise the loss is just, it's sort of capped here at this 300 here with just one of these contracts. And because you're actually selling one of the calls as a naked call here, it's going to take 1,800 buying power just to put on one of these. And then that's kind of the part where it will take up most of the buying power, is selling this naked call in order to pay, to use some of those proceeds to buy the bear put spread. And so the reason why they're selling that call is because then you allow to have a negative vega here, because the vega will contract after earnings. And so that's why they're taking advantage of that. And so if you look at the cost of this trade, we know it will take at least 1,800 buying power because of that call, and there was 499 contracts. So this took about $900,000 just to put on this trade. This short position, we'll take a look at the chart on Target. You'll see here that it's currently right here at 166, and back in May 17, after earnings, it dropped pretty low, all the way down 22% or so to the 160 range, right? So there's this long, big gap here that we are working on trying to close, because right now it's still kind of in that range. We're kind of like right where it dropped back in May of last year. And so I don't think it's going to break this 180 here, which is this prior resistance level here, over here and over here. These resistance levels right here, they don't think it's going to break it, and so I think it's going to go down from here. If it does break it, it's not much of a loss to them because they sold the 182 calls. And so that's the analysis for Target for the earnings tomorrow morning. If you like this video analysis, subscribe and you'll get instant notifications whenever I see these unusual options activity. Thank you and good luck.